All right. Good evening. Good evening. This is JD, the mobile trader, coming to you on the Mobile Trader Network. Tonight is our weekly mastermind meeting. We meet Sundays at 7:30 Central. We had to start Googling what Central Time is. Eastern Time is on the East Coast, Georgia, North Carolina, all that good stuff. Central, I'm in Texas, so I always use Central. But want to get started. I see we have a nice group in here tonight. I'm gonna record this and I'll post it. I'll post it in my Telegram group for the actually for the this I have a mastermind Telegram group. I kind of capped it at 50 people, but I'm opening it back up for a little bit because it's a pretty good rhythm going. So I'll post that link in the chat bar right now. Um, and let if you'd like to join that mastermind group, just come on in and take the not take the test or anything, but just put your information in Telegram. Let me put the link in here. Let me check the chat bar, see what kind of investors and traders we have going. Long-term investor, less than a year on options. Next goal, reading charts. Perfect. That's a great one, Charlene. Um, Intermediate level, comfortable with stocks, trading options for a year. See ya. Nice. Renisha, I'm a beginner since July. I'm a swing trader. I love swing trading. I'm also trying to study options, but for later. Good, good. What's going on, Justin? I've been following you for a minute now and trading in about 3 years. So I guess, hey, perfect, man. Intermediate, comfortable in the market. Uh, you've been flowing. Uh, Jamelin Atkins, been trading options for a few months. All right. Kendall from Mississippi, down there in the SIP. Trade options, comfortable with investing, but could definitely improve. We can definitely all do that, man. So Ricky Connor, beginner options, day trading, cool. Uh, and Fonsec is somewhat stock, somewhat new, but have been very active during COVID. We all have, so that's great. Okay, guys, let's just talk about the outlook for the week. um, One place I go to is finviz.com. It's on the screen right here, finviz.com. And we always look at the Dow and NASDAQ and the S&P, try to figure out, okay, did it close down? Did it close up? My mentor, one of the things he used to have me do every day, he was like, JD, end of the day, come here and focus on the advanced decline line. So how many stocks were up? How many were down? This is the total of the total market advanced decline line. It lets us know the trend. And so like after like a week or 2 weeks, he wanted me to keep track to see if I could pick up on the trend of the overall market. So right now you have 35.95 advancing. That was last Friday, 37.62 declining. So it was a bearish day. But the idea is to look to see how many days in a row are we getting. Are we seeing an overall bearish? But you can look at the new highs, new lows above the simple moving average 50, 200. Those are things that we can kind of look at to get gauge sentiment. It's not just the end all, but it's just something to add to our process, which I'm very big on process, guys. Next thing, the futures are flat to me. They're up just slightly. Let's put it up on the screen on Thinkorswim, guys. That's my primary. It's my go-to platform. It's on TD Ameritrade, and I just I'm a huge fan of it. And let's put this right here. This is the S&P 500 E-mini futures right now, and we're kind of flat, up eight eight ticks, whatever we want to say. But as we move forward, the things we need to pay attention to this week are the COVID cases are spiking, uh, shutdowns are en route around the country. I'm sure some of you guys, is anyone on a curfew where you are or being shut down? Because my wife was coming back He said, hey, they're out of toilet paper at this, well, actually out of paper towels in certain areas, and they're restricting uh, paper products to one per person, that kind of thing. So when we start seeing trends like that, Minnesota 4 week shutdown. Yeah. So this is one thing. Let's take a look at, guys. Put this down. We're going to pay attention to the stay at home stocks, Zoom, Peloton, uh, Datadog. Well, not Datadog, but Teledoc. Things that were popping during shutdowns that still have viability even after the shutdown. We don't want to just have a gimmick. Uh, Maryland has a curfew. No, oh, let me get FinViz off the screen. Thank you. Yeah, y'all keep me in line, please. Thank you very much. That's the S&P chart right here that's the 5 minute chart. I'm a swing trader, but during COVID, I've become more of a day trader because the swings aren't as long. It's always something happening. So, um, what I want to do, we talked about. My first question was, I was going to say, are there any highly successful options traders in the room? Most of us in here that I'm looking at are new traders or intermediate traders, young traders. Um, if you're highly successful, put it in there and shout it out. If you haven't attained your level of success, put it in the chat that what you think you need to work on, because that's as a trader, as an investor, we have to constantly assess our process to see what when I trade, when I like the last 2 weeks have been outstanding for me, just from the standpoint of sticking to my plan, finding the right moves, and the times I've missed, uh, I could go back and see like, oh, I cut a corner here, I cut a corner there, and if you subtract those misses, because we self sabotage as humans all the time, and if we can trim down those moments of self sabotage and carelessness, we'll all find our levels of profit increasing to where everybody wants to be self sustainable in the market and be able to do this for a living or supplement the income. But we have to build that process to where we can continually flow. So chart reading, guys, I keep a journal. I have years of journals. My the basic composition book or a spiral, uh, and I can go back and look back to, if you guys are familiar with The Big Short, I can go back in my journal and look day for day on what that movie had, what I did during that movie. Uh, so it's a good thing to keep history of what you do. So if you buy a stock, you also want to put down your emotional state of mind when you buy it. Like, I'm excited, or I'm pretty scared, or I don't know why I'm getting into this, or I saw someone in the chat room post about it. That's the one I can't. I don't want you guys doing that. We always have to have a reason for our actions. So, does anyone in here set stops? Trade management. Kylan said trade management. That's key, because anybody can get into a trade, and the most novice of novices can pick a stock and make money. But can we consistently locate winners, strategically manage those trades, and then have a predefined exit strategy on either side, a loss or a win? So who in here sets stops and has profit targets when you get into a trade? They're already set. Raise your hand if you can raise your hand, or put it in the chat bar, because guys, we must begin doing that. That is mandatory, regardless of how long we want to be in the trade. It's key. Uh, if we don't set a stop when we get into a trade, even the mental stops, it's not that many people that can handle a mental stop where you say, oh, if that stock gets down to here, I'm getting out. And because a lot of times what happens is it gets down here, you're like, man, I know this thing is going to go up. Or like, yeah, I'm down $150, but let me just hold it just in case. Yeah, I'm down 275. And by the time you get to 275, um, you're thinking like, well, I'm already past my stop. Let me just stay in here in case, something like God decides to smile on me, and I'll say, look at God. He wanted me to. We find a way to rationalize uh, letting things go. we'll let a loser run because we're like, okay, man, we're gonna find a way, but then we cut our winners a little short. Yeah, that stop loss on Robinhood. There you can set them. It's just it's a little trickier. It's almost set up to take money from us. But if you buy enough time and options, uh, you can do it. That's why I love Thinkorswim because you have a more robust set of abilities to where you can set a different type of stop. You can set multiple stops. You can set stop loss. You can set trailing stops. You can set hard stops. Things like that. So it's key. Um, I want to know. So, is there something keeping you? What do you need for you to get over the hump? Because there's all types of material out there, uh, not just the videos that Mo and I do, but there's a lot of free info, uh, and if you can construct it, you can formulate your plan. So just that's what you need to focus on. What you need to do to get over the hump. Uh, would you like to know how to set stop loss, trailing stop? How do you set up your chart? Yeah, man, that's kind of takes a little bit of time, Ricky. Join the mastermind group, man, and on Telegram, and I'll try to figure out some days because it's like time is time is the key component that I can't get back, and I have to try to figure out. I can't just say, hey, I'll be in here that day because I might be doing something else. So I'm going to try, if we can just stay in touch and follow each other, because it takes some time to set the charts up, honestly. But here's a hack. You can go to YouTube, type in Thinkorswim, and type in Thinkorswim setups. Or, there's a lot of guys that do videos on how they set their charts up because this is a naked chart right here. There's no indicators. Uh, but I do have my setups to where I have key indicators on my charts. Like I'll have different study sets loaded where I can have my Royal set up. I can have I'll have a VWAP set up um, to where I can know exactly once it gets outside of a parameter, that's my sell signal, or I'll go, it just, it's taking time to get to that point. Um, like a 21 day and an 8 day. There's certain things that I have to have on my charts on certain days. So it just takes time. But the next move I want to talk about, guys, is important. Um, Time horizon, because I see a lot of individuals. They the easy part is getting into the trade. The tough part is like, man, what do I do now? What do I do now? I don't have a plan. If you asking someone when should I sell, you should not have bought. I hate to be blunt, but we need the honest dose right now. Do not buy a stock. Do not get into an option if you don't have an exit plan in place or a strategic like parachute. You can pull that hatch if it doesn't hit where you're thinking, because you're going to come back in a panic because every time we buy a stock, and I'll just zoom in on this screen right here. I hope I had the right screen up, guys. Bam. All right, just on the daily chart, each one of these candles represents one trading day in time. So let's say that I love a move right here on the September 14th, 15th, 21st, it was down, 28th, had a pop. I would have gotten in. I would have been great. I would have even gotten in the next day on the October 5th. This is a weekly chart. So I'm playing like this is a daily chart. And let's say you get in up here and the very next day that stock's down. And you're like, you got to be kidding me. Next day it's down. Next day it's down even further. But if you stay and hold, it goes back up above your original entry right here, and it's still above it. So what happens to us is like we get here and the next day it's down and we sell and it goes all the way down like, okay, man, or we wait till it gets down to here, till our pain level is too high, and we sell. And when we sell, buyers come back in and push it up, and you're like, I knew I should have bought. I knew I should have stayed in, or I knew it happens all the time, and it will continue to happen. And first off is learning chart reading. Secondly is also establishing an investment time horizon. So let's just say we wanted to buy back in March at the end of, like, when Rona really just had us shuffling and just kind of like, man, what is going to happen? And we just said, you know what, I'm going to put $1,000 in the S&P 500, and I'm not going to touch it until December. That's very tough to do, but you have to have a plan sometimes, and you have to put a time horizon. So one of the individuals I want you to guys think about, I call this the Guru's Corner. Peter Lynch, Peterlynch. He's an amazing investor. I think he ran the Magellan Fund for years. He's just a master investor and trader. And I'll just give you a few of his statements. And it's the question you ask is like, do I need the money in the next month? Do I need the money in the next year? I kind of drill it down a little further. I say, if you need the money next Wednesday, don't put that money in the market. If you need the money next month, don't put it in the market unless you have a plan to say it's a short-term vehicle, and I'm only willing to, you have to put a certain amount of risk. So you can say, I'm willing to risk 10% of this investment to try to make 20. I'm willing to risk 5% to try to make 15, and or 5 to make 10. You just have to establish your businessman's risk prior to entry. What are you willing to put on the table to kind of test to see if your hypothesis or theory is valid? Because we don't, I mean, okay, even the best edge, even the best plan is not 100%. We work in probabilities. The probability of a particular stock moving in this direction over this time period is better than not. So like over the next 10 years, I can say in my heart of hearts that I feel that this company right here, Tesla, over the next 10 years, can you tell me you think Tesla's going to be below $489 in 2030? That thing might be $10,000. Or now, I mean, there's always a probability that it could go down to 200 or 100. But I'm willing to err on the side of history and trends and innovation and disruption and leadership and inefficient markets. People have misunderstood Tesla, miscast them for years. So, or Apple, whatever company that you feel, you saw the bucket naked on their Kindle. That's the Bernie Mac. That's my chart. It's just naked chart. No trend. I say trend lines. No moving averages on certain days. Things like that. But that's how you look at it. Like if you like Apple, if you like Disney, if you like McDonald's, if you like the McRib and you think the McRib is something that's going to boost them every year, what's McDonald's going to be in the next 10 years? Is it going to be a disruptor? Are they going to make a change? Will Beyond Meat make a move? We have to talk ourselves through those processes, and no one should be able to shake you out of that, because no one knows the future of a long-term investment. Now, if there's something going on like a congressional committee that's we don't know what's going to happen over the short term, next 6 months, next year. Yeah, and there's companies like Lehman Brothers. There were signs and signals before when the market collapsed that those are like black swan events that only happen. They shouldn't happen ever, but they happen once every 20 years or things like that. Like I think we're having somewhat of a black swan. So they happen, but there's also, after that black swan, there's also a buying opportunity and a recovery opportunity. So another thing that we want to know, average investors can become experts in their own field and can pick winning stocks as effectively as Wall Street professionals by doing just a little research. That's the truth, or little research. I mean, you don't have to You don't have to have 1,000 uh, newspapers, newsletters, blogs going up, looking at this, checking. Facebook is not the research tool. That's opinion. We're gonna get. I mean, even in the stock scouts, even in our group, there's the experts. You become your own expert. Now there's times when you get someone gives you a boost and like, oh man, a little prod, like, hey, I might check out the electric vehicle sector. Okay, I keep hearing seeing about this Neo, and you type in Neo. Let me see what I have on the screen, guys. Make sure I'm doing it. Yes, Investors Business Daily, guys. I subscribe to that, and I love it because it just you can do a deep dive into some of your stocks, and like Neo fits the criteria for me of quite a few things. So if I want to go Neo, and then I do a hybrid assessment or a hybrid analysis of a stock. Man, I use Investors Business Daily as part of it, but on my trading, I dig off into these charts, man. Like one thing that you should like about FinViz is you can roll your tick your okay, Blink is the one I called out, man. It was like maybe $9, and it's been running. Called out Solo last week. Okay, I need to update you guys. If you guys are in Solo, I call out Solo. It's an electric vehicle maker. It's a single seater. I think it was below. It was like right at 6. I try to call it out below. I called it out below 5, but by the time the meeting happened, our group, it was above 6 during the stock scouts or the market wrap up with JD and Mo. So made it up to 14. Take profit because there's been the EV sector is under kind of a watch right now because short sellers have kind of activist investors are really trying to vet this area because there's such a high exponential growth possibilities. But when that comes into play, there's also room for fraud and also room for skepticism. So uh, take your profit and then just kind of look for a reentry. We'll pull the charts back up. Let me see what's on the in the ticker real quick, guys. Hold on. Okay. And the next thing I want to talk about, guys, let's get to the top 5. Let's get to the wait a second, one sec. Kramer created that COVID-19 list. Yeah. Okay. Thank you, Jamelin. He also created the buy now list, guys. The fund managers at the end of the year, they're not looking to do a lot of selling. They're doing a lot of buying. And hey, and Esther asked about being in alert groups. I mean, alert groups work, guys. Now, you get the right one, and if you get alerts, do your own research also. But if it's a trading alert group, hopefully it's a live group because those email groups, the up 10, yeah, Fonsic, thank you. Um, the email group sometimes the timing is not there. You don't know when they got in. Sometimes now, if they put their entries and exit uh, preemptively, like, hey guys, we're looking at what I'm about to give to you, you pay for that. But the ones that free alert groups, sometimes those guys might have been in it. They may have hopped out. Uh, we don't know the story. So you want to get the full story or you want to have your own process, which now that's one thing that Mo and I really talk about. And we do that, when we have classes from time to time. The idea is to teach someone a process and not just, you know, spoon feed them the, uh, the answers because if we give you the process and you can kind of tailor it to yourself because you need the process, you need to study, but the entire thing that takes so long is creating things, a program that matches up with your personality and your emotional strengths and weaknesses. Some people don't like stocks that move a lot. Some people cannot deal with Tesla. Some folks like Ford. You want a Ford. Ford is Ford tough, but it moves slowly. It moves slowly. I've been building a position in Ford, and once it got past that 757 area and pushed, Ford is one that I'm very bullish on, guys. over a long period of time, and it's under $10. So you can get a few shares. Not a recommendation, not a buy, sell, or hold. Some of y'all might like Hyundai, just a joke. But I like I liked what I saw in Ford's chart right here, and so I just started buying shares off and on, and the reversal. So it's coming up to a point of contention, guys, on the chart. So Ford may pull back and give another chance for buying shares at a lower price. Let's see. I did it again. Well, at least I said it out loud when I'm looking at it. I'm looking at Ford. Ford is right here. There we go. Got in right around there, building shares, and it's kind of hitting a little bit of resistance. When you look on a chart, guys, you, what what we have is called the hard right edge right here. You don't know what's going on over here. We don't know the future, but we can look back to the past and see when price previously came up here, what happened? It met resistance and sold off a little bit. So it might be a little bit of static with Ford. So that can be a good thing. You can buy more shares if you like it, or you do the same thing with any of the companies that you deal with. Now, remember this, guys. Know our time horizon. Know the reason you want to get in that stock. You like Ford. Uh, you like Bitcoin? Do you like all Apple products? Do you eat the McDill, what Big Mac, fillet of fish? Okay, you go to McDonald's, you're buying shares of that. You like the dividend. Know the reason behind it, and own it. Study it and live with it. You don't have to share it with everyone because people will shoot. Well, hey, why don't you get in this one? I told you should have got. Don't miss me with all I told you should have. Why don't you get? You take care of yours. I'll take care of mine, long term investing, and we'll see what happens down the road. There's no guarantees. So if you believe in it and you have your conviction behind your moves or your decisions, stick with it, man, and tell that person in the group who's shooting it down to kiss without cussing. If you want to cuss, you cuss, do whatever. But it, there's no expert that can predict the future. If they could, they're not going to be on Facebook giving the breakdown. All we can work in is we can work on probabilities and possibilities, and we have to live with the outcome. Um, my next move, guys. The worst thing you can do is invest in companies you know nothing about. Unfortunately, buying stocks on ignorance is still a popular American pastime. That's Peter Lynch. Now, this is the one thing that I try to avoid. When it sells off a lot, while it's selling off, people will say, buy the dip. Well, you don't buy the dip during the sell off. You don't know because you might just be buying the continuation down. So they say, well, it's always darkest, and they say before the light, but no, it's almost, Peter Lynch says it's almost darkest before it becomes pitch black. Buy the dip. Not yet. Buy the dip. It's called catching a falling knife. You wait till you see a green candle come in, and it's still not time for the reversal. When you rarely revert, go all the way down on a power bearish trend like a falling, just a waterfall. You rarely go right back up. It's like up, testing, trying my best, working my way back up. It's a process to get back up. So during that process, if you like it, people begin to accumulate shares, but you need to see some type of a recovery of a change of trend lines. Guys, type in, or you can put Investopedia. I'll put it in the chat. Investopedia.com, and type in trend lines. It's Investo trend lines, support and resistance as well. That's key to studying what's going to, for to kind of pick up on what's going on. All right, guys, here we go. Top five. And these aren't guarantees, but if my triggers are activated, guys, I'm going in. Now the first two aren't the top on the true top five. This makes the Investors Business Daily list of institutional investors are putting the money into these companies. First one is BLNK. BL BLNK. Now, okay, this might not be time to hop into BLNK. It's overextended. When you see this is the bullish candle. I mean, this is a bullish engulfing of all engulfing candles. This is a weekly chart. What we have here, we had a bearish trend. Then you have a base formation. When you see stocks kind of trending horizontally, that's called base building. You like a wider base. This was over several weeks. Then you get your breakout. And a lot of times it comes out with power. And so BLNK is one to keep an eye on. Now, these stocks like this can continue up, like on this parabolic move, but expect a pullback. I don't know where it's going to pull back to. Maybe a 50% pullback into the 16s, even down to the 12s. I could see the I could see it coming back into this area like at 11, right above 12, and that because it needs to come down. It might not, it might continue on. So, but institutional investors have come into this. And let me put the one quick thing. I need to put volume on here, guys. We need to show volume at all times on the longer term trends. And if you look on the screen, these are all volume bars. And you look on the left side, it says right here's the daily volume for each candle that I'll put. So let's watch how the volume goes over these days right here. November 12th, 6.6 million. 4.7 on the 13th. 16th, we had 13.8. 17 on the 17th. 15 on the 18th. 23 on the 19th. 44 on the 20th. So we're going up on increasing volume. I mean, we're doubling and tripling the volume almost from the average daily volume at certain points. That means just you get a power move when you do that. Now, even if it pulls back, buyers are going to be waiting at all of these levels. So as it goes down, my buyer. So BLNK, I'd love for it to get back down to 12. You know, that's a 50% pullback though. So it could come back down to the 14s, but let it pull back if you're going to try to get into that position. Next stock is growth. What is it? GRWG. Now, these aren't the top 5 picks to click, but these are the stocks that are institutional investors are just two of them out of like 20 that they're piling in. I love this trend line right here. It's a daily chart. I'll start at the bottom of this trend. You just need 2 taps on the trend line, guys, to have a valid trend line. And let's see what we have here. Baseline building stocks. Yeah, you can go to FinViz and you can run a scan. Base building stocks. You can. It just takes time, man. I can. There's times to do a scan. Go to my YouTube page, and I think I've done one where you do. I show you how to do scans. I do it in the class, in the options class. That's like one of the key days where we try to. The entire idea is, man, you got to pick stocks that are setting up, and then you don't have to keep picking them. You can pick ones that are consistently in a certain trend, and you can find them. You don't have to pay money for those alerts. That's we want to teach you. You pay you get into a course. You want to be able to leave that course and not have to keep paying for stuff. You're paying for the time of the instructors, but uh, you're not paying for them to sign up for their alert system. Now, if you have to work 9 to 5, you get you a good alert system that you can make some money. I like Grow Generation Corp. I think they do hydroponics. They're going to do. I don't know a lot about them, but that was just one that caught my attention. It's a little overbought. It might pull back a little bit into that 25 range, but it could keep going. So don't just hop blindly into this. So here we go, top 5. My first one I'm looking at, guys, that I like. I'm going both sides. I'm playing both sides of the coin. Zoom is on my list for this week. It's set up. It's set up to go. And now what I have here daily chart, came down to a level, found support, pushed up, made a double bottom, and we're breaking above the neckline of the double bottom, which is always good. I might be talking a foreign language to some of you guys, but it's going to make sense shortly. So our entry for Zoom, when Zoom gets above 445.30, we want to see it kind of close, one of the candles close above that after maybe 10:30 a.m. Central. Google Central Time to find out your time zone. So 10:30 a.m. Central is 11:30 a.m. Eastern. What's that? 8:30 a.m. Pacific out there in the West Coast. So the reason I'm saying that, you want to let the day establish itself, because we could go up and go back down. Now, if it gaps up super high, it might gap up into resistance and start selling off. If it gaps up, when I say gap up, when like it closed at 439.60, and if it opens at 470 or something like that, and then it starts to sell off in the morning, don't buy. Just let the thing let it establish itself. So you want to let it establish itself and let 1030 roll around, So the option that I'm looking at, guys, on Zoom, and Zoom is a little pricey, but we can find ways around it, or we can move to another option. But I'm looking at I didn't call out the option for it, but I don't want to do pricey, right? That's $4,000 to stay in the money. Let's just see. They're going to be a little pricey, regardless. I try to stay in the money or near the money. If it's at 439, Zoom pushes pretty good. This 450 is solid, but it's only 5 days, so you would need to set your stop. If it doesn't go into profit pretty quickly, you need to be prepared to exit. So if you're a novice trader, you should kind of stay away from that. But Zoom is set up. That's number one. And these are all stay-at-home stocks. So if the market maybe turns red, or if we start getting those shutdown notifications and a little bit of a panic, I'm expecting a pop in these. Now, I'm not saying it will, but that's why I'm giving you a price trigger if it goes above that level. So I gave out the entry, guys. You're going to have to write them down. Peloton. So we had Zoom. If you want to look at that Zoom chart, it looks exactly like Peloton's. So let's go with the Mamba 2 piece and put Zoom on the screen. Let me put the bucket naked on there. And guys, when you have you're gonna pick up trends. You're gonna pick up similarities in charts. And if you see something that has a similar chart, similar sector, like Visa and MasterCard, they trend together. Visa leads MasterCard's route a lot of time. I mean, MasterCard leads Visa, and Visa tends to follow it. Okay, doesn't have to be exactly like that, but look at this. Look at the channel. Now, let me click in. Let me zoom in a little bit more, and I'm gonna draw that double bottom. Doesn't have to be the exact double bottom. But do you see the same angles that we have right here? Double bottom, neckline is right there. Let me get this other one. But I know you guys see that. So we have, if you get a pop in Zoom, you're going to probably get a pop in Peloton. So the entry on Peloton is, what did I write down? I just want to make sure I got the option. I should have had an option there, but 112.81 is the entry, because I'm looking forward to make a new high. That's when I'll come into it. If we can't afford Zoom, you come over to Peloton, because they're in the same trend, same action, same volume movements. There. Let's see what it costs on the monthly. Okay, if you want to go out to the monthly on Peloton, I don't think we need to go out that far because things are changing so quickly. But the 110, the 115s are good right there. The calls, December 18th, but let's go in a little bit further. See if we can go 14 days out. All right. I like the December 4th, 110 call. It's a really good one. So if let's say you bought it at $630, I'll go to it for another one. Now, guys, I don't go out of the money, man. I do, but there's a certain parameter that I have lined up for me that I don't mess with. And people like to go out of the money because you see the cheaper options. You're like, yeah, it might get up to this. It might, yeah, it might. But if that might, it may. But the probabilities, I work in probabilities, and the probabilities are low. Delta, some people equate delta to percentage chance that you're going to end up profitable. 15% chance that this is going to be, so anyway, you get in at 630, at $630 to get that options contract. Let's say you wanted to just risk $70, you know, so you put what, 540? No, 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 no. Shit, excuse me. Sorry. 560 would be your stop to risk $70. So I would put it'll populate in TD Ameritrade. You would put 560 in here. Right after you buy, you come in, you put 560 in there and click boom, boom, and it'll put the order in there to where if the option price falls to 560, it'll trigger the market order to sell. It may not sell exactly at 560. It may end up selling at 540, 530, because if the market's moving fast, it's going to get you out, but it will trigger it and put the order in as soon as possible to where you're not going to be panicking. So that's just one strategy. So that one, or a little bit more risky from the standpoint of no time, but you would have to make this a day trade. You can do the November 27th 110 call, or the 111. No, 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 no. We won't go 111. We'll go 113. Yeah, the 113, 113, 111, 110 calls. And guys, I'm not writing this down, so I hope you're writing it down. I'm recording it, so I know what I need and know what I want. So let me get to the other ones, guys. Yeah, hey Jaden, that's another class. We gotta study that one on. Go to Investopedia, or let me put something in here where you can look and study this real quick. Because it's a detailed. It just takes some time to understand it. Um, I'm gonna get one of the videos that I did for options. 1 second. And my my options, not option, my YouTube page, man, I have about 100 hours free content of studying. It's all there. So the reason it's just it might not be in the order that your mind needs it, but you just, if you dig in, let me find the options for you guys. Here, hold on, let me put it on the screen. But I'll put the link in here. Equity, there we go. My son organized these for me. Here we go. Start trading. I'll put this link. Let me copy that. And when you go if you go here, just go ahead and subscribe. And Jaden, that should help you out, but subscribe to it. You know, I don't do verticals, Jamelin. And the charts confuse you, Ronisha. Let's come over here to the YouTube page. Start from the beginning and take your time. Um, you just got to take your time with it because it's not going to happen over the day, but the charts will become easier to decipher and understand if you want it. And it's not a mandatory thing to dig off into charts and understand the charts, but if you want to trade, you need to have an edge, and understanding the charts provides an edge to a lot of traders. And also the fact that many traders use the same process of support and resistance, you can almost anticipate like, oh, when it gets up here, it's pretty much going to sell. You know, it's going to pull back unless we have some type of, you know, there's unforeseen forces in the market. You know, you might have just a big buyer influx or some news is coming out, but a lot of times, you know, when you get up to a certain level, you're gonna like, this was a bearish move, sell off is gonna come, and another sell off. That's two moves down. It just takes time to study. This is an ascending triangle, guys. Let me draw that for you. You can write that down. That's just something that you have to be able to pick up on, um, to where I can draw it right here. I got the wrong thing. Little triangle pattern. And an ascending triangle is a bullish type of play. It's a bullish pattern. So you have higher lows. The low price is going up and price is really not going that much higher. You're looking for a breakout of this out of this triangle with some volume. PSSS screen. Thank you. Thank you, man. Y'all are on top of it. Thank you very much. We can't see. We can't see. Okay, I got you. All right. Got it. Here it is right here. We're on Zoom. This is called an ascending triangle. You have lower price, you have the lows. So it's basically called higher lows. And then the highs don't really go much higher right now. But you're looking for either a breakout or at times you get a breakdown. So I'm looking for that reversal on Zoom. The same thing on Peloton. Let's go to number 3 on the list. TDOC made my list this week. And I guess you guys see a theme with the stay-at-home stocks. Okay, with TDOC, this is in a channel. It was in a trading range. Broke to the bottom of the channel, found a double bottom. It's re-entered this channel. I'm looking for another break above $200.33 just to verify that. I like the weekly. It's at the bottom of the channel. Resistance at like 208. We could get a run to that 205. So look for a price target of 205 if and the entry is above $200 so $233. Looking for a $3 to $5 move. Go to the options chain for TDOC. And I'm talking about within a 1 to 2 day window. So the December 4th, let's see what those look like. A little pricey, but the December 4th 200 is a good one. 200 call. These are all call options right now. Let's go back to the November 27th weekly. Okay, it's a lot of action right here. All right, this would be a day trade, guys, if it breaks above it. And you have to establish what you're willing to risk. You want to risk $50, risk 100. You set that. It's because the stock is going to move in its own direction. And the guys, if you're asking the questions of like, what's a put, what's a call, how do I get in, how do I get out, do not trade it. Don't trade if you're not an options person yet. if you don't know certain things, don't just blindly trade it. It feels good because Robinhood makes it easy. And if somebody told me not to trade it and I felt like, oh man, JD kind of broke this down to, yeah, I'm trading it. I'm trading it Monday and I'm gonna lose that little $60 or I might make 80 and I'll get a little bit of overconfident. I become overconfident. I might trade again. I lose 150 and I'm like, you know what? I need a course, that kind of thing. But I'm just telling you, be careful. Uh, Now for me, I like this one right here. TeleDoc fits my criteria. That's why I circled it. It's trading at 480 by $5. So the no, November 27th, 200. It's a winner for me. I need the stock to go above that certain level, but chart looks like it's making that reversal, and then we back out a little bit, and we can see the trend. I'll show you guys a weekly chart, and it's showing me at the bottom of that trading range again. I like being at the bottom of a trading range, coming off the bottom. Let's make a push up to the top. And next one. All right, we're going to the short side now, guys. American Express, AXP. I'm short by. I became really good at shorting stocks uh, during the what is the financial crisis where the big I was when my the way my bank account works, I couldn't short like those dudes, man. They were making hundreds of millions. You know, I was making 1,200 a day. I might make 2,300 or 800 in the morning. You know, things. If you catch a rhythm, you can catch a rhythm. You know, so I see a short setup for American Express right now. Weekly chart setup, daily charts really set up for a pullback. RSI is overbought and it's coming off the top and my angle. So I need to see right here. If AXP, what's this right here? What's that open? 109. The low is 111. We fall below 111.90. We have room for a $2 move. And if it falls below that 109.55, we go down to 108 and there's a chance, man. It's a chance we try to close this gap. I'm not saying it's going to happen. Pay attention to the news. When I see a gap like that, um, I will look. I got to look at the news. And American Express commits 2.5 million to 100 for 100 programs. Let's make sure I have the right chart up. Okay, right up. Um, Chief Executive Officer. You pay attention to the news to see if anything pops up on the screen. There's nothing that looks crazy right now. So we'll watch American Express, and I have a feeling Amex is going to roll over. And if the market opens red at any point tomorrow, be prepared to have stocks to the short side. And what I'm looking at on that short side play is let's give you the option, guys. AXP. And now puts are on the right side of the screen, guys. They're not going to be on the, the calls are on the left, puts are on the right. You can see it right here. Calls, puts. So I like it. Let me see. Okay, here's one thing I also look at. Put to call ratio. How many calls are how many people are bullish? How many are bearish? Okay. Then I dig a little deeper. So bearish side on the higher deltas. Bearish on the 21 to 40s. Okay. All right. This is a day trade, guys, for me. Option I'm looking at would be the 114 puts. Amex, let me write that down. So AXP 114, AXP November 27th, 114 put. And remember, it triggers after like 10:30 in the morning Central. Google what Central Time is, Eastern Time. Let's learn those time zones. Low 111.90. And when you get in, you set a stop. Say I'm gonna risk $60, $50, $100, 150. That's what the next level of you understanding how to trade is, establishing your risk reward, establishing how to truly set stops. That's something I can't just give to you over a weekend mastermind call. You know, that's something where you have to dig in, and either you come to a class and or you just got to it's a journey. So, but anyway, you can establish a certain amount that you're willing to risk. Like, look, man, I'm not wasting this light bill money. I got $60 to put on the line, even though this option costs 400. Now, you don't have to wait till the option gets to its expiration. You can get in at 9:30 or 10:30, 11:30 in the morning. You can trade. You can close out at 11:31. 11, you don't have to wait. If it hits your target or if it hits your pain threshold, get out, get moving. All right, next one. One of my favorite companies, Facebook. But where I'm looking at Facebook to the short side this week. Facebook is tricky. But if this sucker falls below 269.41, 269.41, I'm putting some chips on the table. And Facebook, let me just see if a lot of people are in this thing. Yeah, they're looking for a bearish, a little bit bearish pull. It's a lot of folks. All right, we'll go a little closer. A little closer. These will be day trades, guys. Remember. At 270, December 4th, 270, put, we write that down, December 4th, 270 put. November 27th, even better. Yeah. November 27th, 270 is a good one. Because it expired. What's today's date? The 23rd or 20? Yeah, guys. And if you get into the weekly option that expires in 5 days, do not hold that thing overnight. You got to get out because there's something called theta. It's called time decay. It'll eat away at the value of your option. That's something you have to study on your own. All right, next one. Apple. This is for advanced. If Apple falls, I've been waiting for Apple to pop. It's a bull and a bear case for Apple right now because it's in limbo. Apple breaks above 120.99, it could be off to the races. So on both sides of it, Apple 120.99, and if this puppy falls by midday or whatever, or later in the afternoon, uh, below 117.29, it's a short. It's a small window. Get a $4 move on Apple. Mm, mm, mm. And Apple's options are always the weeklies are always, the price isn't crazy. So if we go bearish, if it falls below that the downside, I'd go into money at the 118 put If it goes bullish, it gets above that 120. We go with the 118 call. I like that layout. I'm not, guys, don't fall into the trap going out of the money all the time. Just because, oh, it's 40 cents, man. It's, yeah, keep doing it. You're going to hit on a couple, but you're going to keep paying it and you're going to give the market your tuition. You're going to hand it over, hand it over, hand it over. You're going to see, and then you're going to realize, like, you know what? I need a new program. I know that I've done it. I've done it all the time where you sitting like, 11 cents, $14. Apple's only, it's 124. It's a reason that thing is cheap. It's a reason that thing is 9 cents because there's an absolute reason it's at that price. Okay. So, I mean, the probability is low. It may hit because I might hit the lottery tomorrow, but the probability of me hitting that lottery is low. So when it's a low risk, like cost $1 for that ticket or $5 for the ticket, lottery ticket, possibly make 500 million, the probabilities are low. So let's play on the side of probability. I've given you guys the parameters. If it goes above a certain level, we look to the long side. If it goes below another certain level, we look to the short side. And the idea is to get in and get out. You got to Bobby Brown it. I mean, he wasn't trying to marry him. He was like, been through a whole lot, man. His brother had a tough life. But anyway, guys, I'm gonna leave y'all with that on a Sunday, man. I'm gonna put my name, I put my email in there. I think you have it. If you want to join, yeah, Bobby Brown, yeah, man, he was. It was his prerogative. I'm trying to drop some quick ones tonight. Email me if you want to join the mastermind group. Hold on one second. And also, guys, Mo and I are gonna have a options course. We want to just uh, I wanted to just have 5 students. Mo is open. He wants to. We're opening it to 10. I still think it just needs to be 5 because if you when you pay money, you need to have. They need to. The course needs to be tailored to you. It doesn't. You don't need to pay $1,000 and or $800, and then you're watching videos the whole time, and you can't talk to the person who did the course. And because anytime I've taken those courses, I had to I had I had questions, and let me just put this in here. Let's see. There it is. Second one, Gladstone VIP member vault, guys. Go to that one, and go to that. And if you want to take the course, you do it. But hey, guys, y'all take care. Um, I'm here. Email me if you have questions. But thank y'all for coming out. Take your time. Don't spend extra money. Save your money, and really, before you get in the market, study something. Look at the videos. Do whatever you need to do. But I appreciate y'all coming out. We're taking 5 to 10 in the group. Baba, yeah, I didn't forget to talk about it. Baba falls into my outside that top 5 for me this week. So um email me and I'll let you know about Baba, Jaden. Okay, guys, I'm gonna shut it down. Thank you.